Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, January 27th, 2020. It's about quarter to 11 right now, Eastern Time. I wanted to get a video out early today, just kind of talk on the markets, levels, what to expect. As a follow-up to Friday's post, we had, for the first time in quite a while, sell signals triggered on the U.S. equity markets. We had the impulsive breakdowns of those 60-minute charts. Again, my primary focus has been on the tech-heavy QQQ because I said once tech breaks and these market leaders, that's it. They are the market. Make no mistake about it. You will not see the S&P 500 go up with NASDAQ 100 going down or Facebook, Amazon, Microsoft, Apple, those guys. Now, we still have them all reporting this week, so keep that in mind. So as I posted this morning, I put some charts out today that I expect some tradable, a decent bounce off this level, at very least a reaction. Let's talk about reactions. What I mean by when I say reactions, when you're on the site, on the homepage, if you're reading any of the homepage posts and you see some squiggly lines below a word that's called a tooltip, if you hover it'll pop up, and so for example on a reaction, that's where I define that as either a consolidation and or bounce off the initial tag of a support level, or if it's a resistance level and we're going up, then that's on the initial tag is what I look for a consolidation and or a bounce. And so you can see, after the breakdown, we hit that 91.11ish level there, had a little reaction, a little bounce up to this point. Then the futures opened down on Sunday night, and have since, after that they consolidated. They hit that target, that 90-22-50-ish target right there, set up in this little pennant type pattern, and then broke down, had an impulsive move, but we hit this level. So you might be wondering, well, Randy, that's a bear flag right there, a bearish pennant. That's your flagpole. There's your impulsive move off the highs. This would be considered a flagpole. That would be a pennant. And this would be a impulsive breakdown. No. So Randy, why aren't you looking at the measured target, which would take you down here closer to the, the bottom of your target zone? This is again my preferred swing target zone. Each of these are targets, but unless we get at least down to here, I have no desire, for swing positions that I put on to cover. Now, gaming as an active trader, I said I expect a bounce today, so I'm went long this morning. And I'm going to just try to ride a bounce up because I think we'll get one. So why am I disregarding the measure target? Well, number one, we're pretty darn oversold in the very near term. And you can see right here. Number two is the fact that those market leading stocks are all reporting this week, Apple kicking off tomorrow night. So the market will probably not do too much more in the very near term. It is possible. And if nothing else, this is just one more of a long line of examples that I point out all the time. I've said this for years, that news, the headlines, will very often either follow, meaning come after, or coincide with the technicals. In other words, this has been setting up. This is the level we've been watching for a while. The sell signal was pending. Now the media is, of course, signing everything to the coronavirus, coronavirus over there in China, and a couple cases here. And yes, is it something to be concerned about? Absolutely. But is it any different than the swine flu and SARS and all these other things in recent years? Only time will tell. Look, I believe one day there will be a big global epidemic. As the world gets more densely populated, there's a lot of frequent travel, and then that brings you in contact. But let's not even go there now. This is completely a technical breakdown, and this is follow through. And the fact that we're down here with earnings coming up now will probably put this market into a holding pattern. They did gap down, and what happened is because we gapped down, remember we had 91.11, that was the next target after breakdown, and that was also the next sell signal to come. That's what was stated on Friday. And we didn't just limp low, that's an impulsive break. So we took it out, and then you hit the next target, consolidated there, fell to this level. And so we've been consolidating all morning. I still think, as I gave you earlier, a bounce target zone. Let me clean all these out. I said right here, this is what I expect between now and before Apple reports. tomorrow night. Remember, if you're trading futures, there's going to be a lot of movement after Apple reports tomorrow night. You'll have all through the night into the early morning session. If you trade ETFs or individual stocks, yes, you have the after hours trading session, but then you shut down all night and it won't pick back up. So you're going to see a gap down or up on QQQ come Wednesday morning, most likely. But either way, this is what I'm looking at now. And you can see so far they've held that 89.67-ish support right there like a champ all morning. You know, this was the opening spike. You get order imbalances, kind of ignore anything there. It snapped right back up. And then we zoom in real tightly. You can see all the candlesticks have closed right up on that level, on or right around there so far. So that's the support that I think will hold right now. And here's how it works. If it doesn't, then we come on down. It opens the door to here, and this is even more solid support. I can tell you right now, as much as I favor a bounce here, at least to the minimum, that minimum bounce target area right there, about 90.22 or so, all the way up there. I can tell you I would favor it even much higher if it got right here. That's a pretty decent, even a better well-defined support level. So that's where it looks like we're going. Let's look at a couple other things on this chart. I highlighted on the chart this morning. We look at the PPO. You know, we're quite a bit oversold in the near term here. Again, only a 60-minute chart, so we're not oversold on the dailies or the weeklies or anything. But you have the PPO curling up, poised to make a bullish crossover, and that usually triggers some buying when you get that. That's usually foreshadows a move up. So that's it. And again, now where we're at, let's just say you didn't have a position on Friday, a short position, or you didn't exit your longs. You said, well, Randy, you've been saying this market would drop for a while, and it hasn't dropped. So now you want to know what to do. Look, I still think everything I said recently, all the charts on the FANGs, we'll hit on them real quick, were to me in clearly bearish technical postures. As of today, a lot of those that hadn't broken down, like Apple on Friday, have now broken down. QQQ is broken down. NQ, we have these sell signals, and they're playing out. In fact, they're playing out a little more than, so far this moved down a little more than I thought it would before earnings. But relatively speaking, let's try to put this into perspective. This is not a huge move down. QQQ is down 2%. That's not huge. There's days that it can go 3, 4, even 5% on an extreme, and we're still not far off all-time highs. So I just want to again put that into perspective. There's the levels. QQQ on the 60-minute chart, 217.70. That was the next target that I had. If 219.84 was taken out and it was hit, and you can see so far reaction. You can see that 60-minute candle held right there, and we're above it still. And and this is the top of the what I call my minimum swing target zone. No matter whether we get the bounce all the way, whether we get a bounce or not, let's just say I believe we're going down here at minimum in let's just say within sometime this week. We'll keep it very simple. That'll be sometimes this week if it happens, I believe. So those are your levels, and the way it works is if this level goes with conviction. Same on NQ. I like to watch the futures because you can see there's a lot more trades. You have a lot more 60-minute candles going on here right now, and that would open the door for a move down there. Let's look at the intraday charts real quick. Okay, here's some levels to watch on, if you want to grab a drawing tool, show you where I'm working at. Down here, these are the various time frames on NQ right here. This is NQ, 2-minute chart, you have a 5-minute chart right here, 15-minute chart, so forth, so on, 1-hour chart up there. And what I'm looking at, oh, you can't see the 1 hour, it's cut off. There's a lot more charts on the screen than you're seeing here. What I'm looking at is really right here. It looks like this is the area. It was support, 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 broken, and we tested that this morning. So we need to pop above. It's roughly the 9,000 area. It's just zoomed in a little. It's not exactly there. That line should be a little bit lower. So roughly 9,000. We're kind of trading right here in this range, and again, if we pop much below it, that is going to open the door to that move down to that target I just said I expect to get hit. And I'll tell you what, they normally come in on a big dip like this, they buy it up hard at the open. That has been the MO. So another takeaway from all this is we finally had a sell signal, And what's happening now is there's a change of character in the market, a clear change in character. Whereas a big dip like this, how many times have you seen, especially intraday break or brief breakdowns below like a 60-minute trend line or support, only to see the buyer step in really hard and get it back above and close 60-minute, print a 60-minute close above that level. That's not happening here. This was this morning. Buyers have stepped in. There's the open right there. You can see all the volume. It's kind of covered up a little bit by the that low of the day bubble right there. But there's the volume. I'll show you QQQ in a second as well. So that's it, and that's that same range I have boxed in here, and you can see it here on this 15-minute chart above. SPY, you have about 3250 or so. You can see right there. This is a 2-minute chart on not SPY. I'm sorry, guys. ES, the S&P 500 futures. Look how many tags there. So that's the level that we need to pop today. And remember, earnings are coming up. And my guess was, as I said last week, is we'll start to see a little profit taking before then, because as I said, if I owned Apple after the monster run that it's had and some of these other stocks, I would be nervous. I would not be looking forward to another, 10% upside, 15% upside if Apple beats earnings. I'd be more concerned about a sell-off, especially if they disappoint. But as I said before, and I use Apple as one example, one of many, where I've seen companies meet expectations or beat expectations, give good guidance, only to see the stock turn around and correct sharply after that. And that tends to happen after very extended overbought runs, where what happens is the stock gets ahead of itself. Everybody's bullish, shorts have given up, everybody's long, and really the any positive earnings and then some is already priced into the stock. That's why stocks bounce up and down in value. It's they get overvalued, undervalued, and of course technicals come into play like everything I just said. When everybody's bullish and long, especially after months and months and months of an uptrend, metaphorically speaking, the last bull has already bought his or her share of that stock. Who else is left to buy when everybody's bullish and owns the stock? And likewise, you have the shorts have given up. Last of the shorts, again, metaphorically speaking, have been squeezed out. Therefore, when you start to get a drop like today, those shorts aren't there to cover. They're the only natural buyers. That's what I always like to say about a stock, is short sellers are the only natural buyers in the market. I'm sorry, that's not correct. Not natural buyers, guaranteed buyers, because they have to at some point cover their positions. Let's get these charts back up and take a look at a couple other things here, and we'll get this video out to you guys. All right, so go back here to the QQQ. And that's that comparable level I just showed you. If we zoom in a little tighter here, we can look at it on a 5-minute chart. A lot of lines there. We can look at it on a 1-minute chart, and that's that same area there where we've been sort of consolidating since the open. So there it is. This is the big gap. There's Friday's close. We gap down today, moving in this range. We're at the bottom right now. I'll tell you right now, as I'm doing this video, it's going to take a little time to get out to you. That's where I covered and reversed my my active trading position today. Even the position I had taken in, I have some swing shorts in a couple IRA accounts, but my trading account closed out and at that support level on NQ and reversed to a long, and I'm still expecting a pop above there and to go up and hit those targets I showed you earlier. So what I'm getting at, we're right there again. We're testing that support level once again. Here, let's go back to NQ. And so this is an objective long entry. Now, if we break much below there, we're going to go down there. You have two choices. You can either ride that out, and I severely doubt that we would drop much more than below that 88.90. That is, again, a very, very solid level. We'd be extremely oversold. Again, the China virus right now, coronavirus, is it something to be concerned about? Yes. Is it going to change the whole course of the stock market and all that? Probably not. Again, go back in time, Asian swine flu, SARS, all these other scares that we've had ended up being contained. What it was is the market needed an excuse to sell off. The technicals happened, and now, again, the media is assigning a reason for the drop, and partly rightfully so. And again, that's why I said it's not just random coincidence. It's just they kind of tie in together. So let's get away from that and let's look at a few other things, and we'll wrap this up and get it out to you guys. Let's talk about SPY. I showed you the levels on QQQ. Let's go to ES real quick on the 60-minute chart. I just showed you a 1-minute chart, some levels to watch. Remember ES, I had these levels here, 32, 32 is support on ES, and a little support zone runs down to about 32.24, but we hit that level. And again, you can see the PPO turning up here at very low levels. Just made a bullish crossover. You can see the RSI also very oversold. This is the RSI 9 right here. If I put an RSI 14, it's going to be similar. The last time you saw the RSI 9 this oversold down there around the 9.3 level was back here. And then put in a slightly higher low. It was back there. Put in a slightly higher low, giving it positive divergence on the RSI at least, and boom, that happened. I don't expect this. Anything is possible. I keep talking about how the charts to me are clearly bearish on Apple, Facebook, and all these other stocks, and which way I expect things to go, regardless of what they report. But if I'm wrong, anything is possible, and that's what stops will do. Is stops will prevent you from a big loss in case the market does take out those highs. But that's that right now. Those are your previous highs there on ES. And again, you hit support. Nothing goes down forever. The fact we have earnings coming up and everything else, I think, like I said, selling is probably finished for today. I still think this is an objective area for an active trader to go long for a bounce. Probably anywhere up to this area here. At minimum right here, I'll tell you 32.55. That'd be a minimum target. And I'll tell you what I'm doing with NQ is I have I layered came in today what I had, nothing heavy, and then covered that, reversed that, and then layered into a couple lots. And what I'm going to do is I have a sell limit order for one lot right there, a third of the lot at just under 90.22. I think it's at 90.2175. And then at that point, I'll also put a stop on another third of the lot right there just below that. I have an order ready to be fired off at 90.1975. So if we get there, again, one lot should be sold right here, boom, and I'll still have the other 2/3 of the position. I'll set a stop a little bit below there to let that let 2/3 ride. If it goes back down, I'll get taken out of that other third. It's a little complex, but what it'll do is it'll keep me in the position if we start to get a runner that runs up here all the way, maybe all the way to that 90.10 position. But it's also going to guarantee some profits, and then on that remaining lot, I'll just have to assess the price action as we go. So that's kind of my plan, and it's a little more complex. But like I said, you can, if you're an active trader doing a bounce trade, you can take the quick buck, get out. I wouldn't wait for 90.2250. Sell just a hair below if that's your target. You can see there's some resistance just above there, about 90. You can look to the right where it's the blue values, price value 90.44. That's another resistance level. And then you have a pretty big old gap that could be backfilled. Again, that would be my maximum upside target. And I will say this too, you might want to wait till some of these FANG stocks, at least Apple, is out of the way on Tuesday. But if you are looking for a place to short, you didn't want to do so already, but now you're convinced, hey, these are some decent sell signals, or for whatever reason, maybe you think the coronavirus is going to be a bigger deal. That would be, I think, a very, very objective shorting op and a very attractive price if we got there. No guarantees that it pans out, but I can tell you that's a very good level. Remember, the yellow lines were the most salient levels on the chart. You had the trend line break, number one, so that's where your first sell signal was triggered. And then I had, although there were some minor support levels, this was a pretty big level right there to me, 90, 110, 91.11. And so any pushback to there, I think, was very objective, pretty high probability entry. And again, with a stop somewhat below, where you put, or above, where you put that stop is up to you. If you're going for just a little, you're only going for this, and that's, I don't know, what is that, no, not even 3%. less than 3%, be about 2.5. If you're going for 2.5%, you don't want to use a 2.5% or 3% stop. You want to use a smaller stop, at least 1%. But if you're going swinging for a much larger move down, then you can use a wider stop. But at this point, really probably not. I think at maximum above the maximum stop would be somewhere around here, maybe a back test of this trend line or that 92.06 level, and that's again on NQ. Okay, and I should focus a little more on the ETFs. I realize a lot of you don't trade futures, but that's something to watch too. And you can get free futures quotes from a lot of brokers. TD Ameritrade, Thinkorswim platform, which is now, I don't know if the merger with Scottrade's already finalized. Investing.com gives you free real-time futures quotes around the clock, things like that, just to see what's going on. And again, to watch those levels, because if you're a SPY or an NQ trader or QQQ trader, you'd see the futures also hitting support. ES, NQ, all hit support. QQQ, SPY, all in pre-market today. I've got the pre-market trades turned off now, but you can see that. And look what SPY did. It hit this target that's been on this chart for a while, 323.80. Came down. You had the opening order imbalances. Remember, when you gap down, what that means is stops are being hit. Anybody that had a stop loss, I talk about this all the time, that stop loss orders are great. You should use them, but they're not a guarantee that you're only going to lose 1, 2, 3, 4%, whatever your number is. Because this is where we closed on Friday, that yellow line. And if you had a stop, let's just say right here, or let's just say below that 36.82 level, support level. Guess where that stop loss order was filled? It was filled here. Stop loss orders, once your stop price is triggered, meaning if you're long, once the stock moves below that level, let's say it was 326.82, that stop loss order is converted into a market order. And so what happens on the open, that's why you see the big volume bars, all those stops that anywhere from where we closed yesterday down to here, they were all hit at once. They were converted into market orders. So you might say, well, Randy, okay, I won't use a stop loss, I'll use a stop limit. Well, stop limit orders will say, stop me out, if SPY crosses below 326.82, but only at 326.82. And guess what? You're still long the position. Because it will only fill you at 326.82. So in other words, the stop has been triggered, but the limit part, it says fill me at 326.82 or better. That's what the limit price means. And you're not going to be filled. And if the market does this, guess what? Your losses continue to build. So that's a little takeaway, and I try to impress upon the point that, know those type of orders and what may happen to you. And also, again, it talks about why you see the order imbalances, why the SPY, when you had really good support right here at 323.80, why you see that big spike down at the open. Again, these are opening order imbalances. You can see it right there. Boom, order imbalances were cleared out. Prices kind of stabilized and have sense. This will break one way or the other, probably today. And again, my thoughts. I think it goes to the upside. But if it goes to the downside, here's the thing. You can see, go back to a 1-minute chart, you can see, well, here's the opening low. There were a few spikes down there. So you'd want to stop, not too far above there or below there. Because if you did get stopped out, that could very well open the door down to this next two support levels here. This is a pretty decent zone, about 320 down to about 319.50. Okay, and as expected last week, if all the, if those sell signals triggered and the stock market started to correct, you'd see money move into the risk-off assets. Remember, risk-on are stocks. When the market's risk is on, people are buying stocks. They're buying low-quality stocks, high-quality stocks, just about anything, high-growth stocks especially, technology over utilities, things like that. And of course, once that changes to a risk-off environment, investors, especially institutions, flock into Treasury bonds. You can see a nice move up in TLT today. And remember, TLT had a similar pattern to gold, which is another risk-off asset. We'll get to that in a second. You had this symmetrical triangle pattern, and more so you can see it very clearly in TLT, and a nice upside break right there. But we are at resistance. That's a resistance level I've had on this chart for a while, 143.63 or so. If the market continues to sell down from here, and I think again there's more downside to come whether we bounce in the near term or not. That'll be the next stop there, about 146. That's TLT. Gold, of course, being another risk-off asset, doing very well. The bullish case continues to firm up. Let's get these trend lines loaded here. There we go. Okay, so you can see now how similar it looks. I just showed you the symmetrical triangle pattern in TLT, right? Same thing here. We broke out and boom, an impulsive move up. Remember, we hit that overshot, a little momentum fueled overshoot over the previous high, came back in. That was resistance. We consolidated, and this is pretty healthy. So far, it's been more of a consolidation in time than in price, or more of a reaction. It's been a consolidation, or what I call more of a correction, is what I meant to say, in time versus price. And now we're moving up, and we've taken out that previous high. So that looks good for gold. Everything, what I'm getting at, guys, earnings can go either way and foil even the most bearish or most bullish of technical chart patterns. But right now, everything is lined up. The technicals have been bearish, looking for this. The sell signals are now triggered. Those stocks that are reporting, the big market leading FANG stocks, all have bearish technical postures. So with the sell signals being a check mark, the bearish technical postures a check mark, and these risk-off assets, money moving into gold breaking out now. Not a very impulsive breakout, but it has taken out that previous high. It's just a lot of check marks to say that the near term to even intermediate term outlook for the market right now is bearish. It's going to be a little choppy this week. That's just what I want to convey to you guys. Bitcoin, GBTC, this is our official proxy for Bitcoin, and moving up as well. Remember, I told you that should go up if the market corrects. It's a risk-off asset. People flock to this. A lot of people buy this as a proxy to other risk-off assets, and so that's doing well today. And finally, I've been saying Palladium had just such a bearish setup and so much downside, more downside than the market, is what I'd said once we get a top. And it would take most likely the market buckling before Palladium buckled, because there's been a very high correlation between Palladium prices, this big run up, and the equity markets. And there it is. PALL, the ETF is down 5%. It's coming up on the first support. So if you're short Palladium, if you shorted it, came into the week short especially, keep in mind that it is coming up, at least this ETF here, divergent high. Now this guy has a lot of hot air to come out of it. What I suspect will happen, the market will probably hold up, stabilize at some point today, is my guess, or by tomorrow, of course, with Apple reporting, after the bell tomorrow. And then at that point, Palladium may stabilize. But this is one I probably be more interested in shorting bounces than trying to go long, because once the trend breaks in a one-sided trade like this, a lot of the bounces tend to get sold into, and this guy can just keep going down. It has a history of that. That's a 60-minute chart on PALL. Again, the ETF. You can see the trend line there on the daily chart. There was a smaller trend line, huge volume. This to me is indicative of a blow-off top, what we call a buying climax. See that volume with that parabolic advance, and buying climaxes don't end very well. Before all is said and done, I think Palladium's coming back at least that 170.81 level, and as much as it's down today, over about 5% right now, that's not about another 20% downside. Palladium futures, boom, took out the 60-minute trend line. Although we've had these steepening lines, kind of a parabolic advance, this trend line I've had here, this yellow trend line, on the 60-minute chart, it shows well, and that was taken out, back tested, and we also had that 2300-ish resistance, kind of came and back tested that as well, and moving down, and there's a little support here. So that's why, like I said, we're coming up on support. Not the most objective time to short it right now, but whether we bounce or not and how far we bounce, max bounce target, just like the market, if we get a bounce back up to here, this would look objective. 2300 and or that trend line for a back test. We might not get it, probably won't get it, because I think a lot of longs get got trapped in here and a lot of shorts were blown out, and that usually opens a door for a quicker move. But maybe a little reaction here. Again, I don't know, and that's why I gave you those bounce zones. Earnings are going to kind of muddle everything up this week, so that's it. That's what I'd like to say, is that would be an objective short entry if we get there. So here's that's 2,300 or so. I'm trying to box it in. That's 2,200 we're at right now, and if that 2,200 level goes with conviction, you can see my next. This is more of a support zone when I have two levels in close proximity, about 2,100 down to about 2,064. So that's the next target on Palladium futures, PA. Okay, let's wrap it up here. Really not gold, natural gas. I'm sorry, natural gas and crude oil. I just don't see much right now. I don't see a reason to go long or short either of those two. So I'm not going to update those in this video. These are the things that I think where at least where my focus is now. On the precious metals, risk off and risk on assets. Short the risk on assets. Like equities and Palladium in this case, and long the risk-off assets. But strategically or tactically, if you want to do this right, again, if you jump in now with QQQ down as much as it is, you're risking a bounce anywhere from here or within the next day or two before Apple reports. I don't know why all these grid lines suddenly appeared on my chart, but there it is. QQQ kind of hanging in there, hugging that 218-ish level, and like I said, we'll see where it goes from here. You know where the levels are. If we bounce, and I'll do a follow-up video or put some charts out with some additional targets or anything else I see later today. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.